Hi and welcome everyone. It's a bit rainy and windy today. But this week, market just kept climbing. Major US indexes closed again near their all-time highs, which says a lot. Investors are still in a risk-on mood. There is confidence out there, even though everyone knows the markets have been running pretty hot for a while already. Inflation data came in softer than expected, and that's exactly what the market wanted to see. It confirms that prices are cooling down, and that gives the Federal Reserve more room to continue cutting rates. Another 0.25 cut is expected this Wednesday, and that's already mostly priced in, I believe. So overall, the sentiment is quite positive. The economy looks stable and investors are still willing to take risks. And now let's talk earnings. Netflix reported strong subscriber growth and solid profit margins, but the stock still dropped. That shows how high expectations are right now. Even a good report can disappoint if the outlook is not strong enough. In tech, the Intel and Lam Research both confirmed strong demand from AI and semiconductors. The same goes for IBM, which keeps growing steadily through AI and cloud integration. And the whole AI semiconductor space finished the week very strong, with investors still betting heavily on that long-term trend. What's next? Honeywell and Thermo Fisher Scientific also showed stable results. Another reminder that industrial and healthcare sectors are holding up well. So the big takeaway from all this: earnings continue to show a healthy, resilient economy. Companies are not warning about slowdown. Margins are okay, and demand is still steady. The general tone from management calls was cautious but confident, which perfectly fits the current market's mood. When we look at positioning, fund managers still keep some cash on the side, ready to buy any dip. Large corporations are still doing buybacks and acquisitions, which means liquidity remains high. That's one reason why every small correction gets quickly bought up. There is just too much money waiting to re-enter the market. Now, looking ahead, next week is going to be a big one in comparison with the previous. We'll have US new home sales on Monday, which will give an early signal about how confident consumers feel. On Wednesday, the Federal Reserve meeting. Everyone expects another rate cut, but Jerome Powell's tone will matter even more than the number itself. We'll see. Then on Thursday, for the European investors, we'll get German GDP, German CPI, and the European Central Bank rate decision as well. All very important for Europe's outlook. And on top of that, a huge week for the earnings. We've got Visa, Apple, Amazon, Eli Lilly, PayPal, SoFi, and many more reporting. These companies will set the tone for the rest of the earnings season, from tech and fintech to healthcare and consumer spending. Personally, I'll be paying close attention to Eli Lilly, especially in relation to Novo Nordisk, since both are leading the new healthcare and biotech wave. and PayPal and Amazon will be essential for me as well. So to sum it up, the market looks still strong, inflation is slowing, the Fed is cutting, and liquidity is still high. Yes, valuations are stretched and some stocks may cool off, but the big picture remains positive. As long as earnings keep confirming stability and the AI and chip sector stay hot, investors have every reason to stay optimistic at the moment. But we'll see how it goes, and let's look at the upcoming week. Thanks for watching. Please hit the like button, subscribe to my channel if you did not do so. I'll see you in the next one.